Good evening once again, and Assalamu alaikum, everyone. The purpose of this seminar is to discuss about the realities of financial world, what makes our world vulnerable and fragile to financial crisis. We had one in 2008, and we just barely came out of it, and there is another one. So is that going to be the future of our world, that we should be waiting for the financial crisis one after another? So we'll have that discussion, and then we will discuss whether this 2020 economic meltdown was that imminent with or without COVID-19. And then we'll look at Qatar's response to COVID-19 led financial crisis and the support that the government has initiated to protect the people as well as the businesses and economy in this difficult time. Okay, so I'm gonna sort of share some of the presentation. I actually intended not to use PowerPoint, but I think there's some material that I'll be able to make a better sort of impact if I use those. You will see on your slide, on your screen, a slide which shows the comparison between the manufacturing and the financial sector of US in terms of their contribution to US GDP. We have to have this discussion in the context of United States. The reason being, US is undoubtedly the financial capital of the world. The saying that if America sneezes, the rest of the world gets flu, that's absolutely true. That what happened in 2008, and that is what's happening in 2020 as well. This graph tells a very daunting story. What it tells is that there was a huge gap between manufacturing and the financial sector in terms of their contribution to US GDP. But as we see, that the manufacturing sector kept declining and financial sector kept going up. And it was somewhere in the middle of 1980s that the intersection took place, and financial sector kept going up and manufacturing sector, which we also call real sector, kept declining. And what happens after this intersection? This gap kept widening, and this is come to be known as financialization of the world. And what we mean by financialization of the world, financialization of the world refers to the growing size, growing power, and growing influence of financial markets, financial institutions, financial elites, and their financial motives in operation of world economy and its associated institutions. So what we see in the era of this financialization, there were four visible outcomes. And those outcomes were, number one, as I already said, that the financial sector grew in size and importance and influence. Second outcome was that the wealth transferred from manufacturing sector to financial sector. The third was there was a growing income inequality and wage stagnation. And fourth, we saw the financialization of household as well as financialization of non-financial firms. All right, so that what is the four outcomes that we see in the era of where the financial markets, financial institutions, financial elites, and their motives, they dominate the world. Right? Who are these financial elites? Who are they? They are, we can say, top 1% of the wealthy people who controls about 50% of the world wealth. They are the one who have access to the best possible resources, brains, opportunities. William Domhoff is a professor of sociology in University of California. He wrote a book called Who Controls America, or Who Rules America. And in this book, William Domhoff says it's the 1%, top 1% financial elites. And then he divided the top 1% into half. the lower half and the upper half. And he said it is actually the upper half and predominantly the top 0.1%. They are the one who have utmost power. Power to influence financial markets, power to influence corporate behavior, and the power to influence economic policy. And the outcome, economic outcome, is what exactly the financial elites wants. So let's quickly explain this very quickly. Financial markets, right? So in financial world, so the dominant are the financial markets. The size of world GDP is approximately 89 trillion US dollar, and the size of equity market alone is exactly the same, 89 trillion US dollar. And the size of financial derivatives market is about 640 trillion US dollar, 7 times the size of world GDP. Take, for example, the Forex market. Average daily transaction size in Forex market is about 6 trillion US dollar. And that makes hourly transaction size of 250 billion US dollar in 1 hour is traded on the Forex market. And that 1 hour trading in the Forex market is much higher than the annual GDP of Qatar. So this is the size of the beast. This is the size of the financial world that we're dealing in. And what is happening, for example, in Forex market is just a speculation. There's no real economic activity. People are trying to bet on the prices of the currency, which is going to go up, which is going to come down. And that's what the size of the financial market is. So what emphasis is on the financial market, as we look at the finance literature, we see the emphasis is on, for example, informational efficiency of the markets, transactional efficiency of the market, and pricing efficiency of the market. There is no emphasis on the role of financial market in the distribution of power and resources. What we see in most of the economics book is that a good or efficient financial market is the one that allocates resources to the most productive uses, but that's not true. For example, equity market is not the source of raising capital anymore. Equity market is now the source of draining capital. The companies buy back their shares more than the issue in the equity market to raise the capital, right? So the role of financial market has completely changed, and there's no emphasis on the distributional role of financial markets in terms of power and resources. Corporate behavior, right? So look at the top international firms who don't only have the international economic influence, but they also have geopolitical influence as well. And who owns most of these organizations? They're the financial elites. And the most interesting of all is how financial elites influence economic policy by lobbying politicians and governments and the government institutions. Interestingly, in USA, we have 2 major parties. We have Democrats and Republicans. Democrats are known as pro-labor and Republicans are known as pro-businesses. Then we have in England, we have 2 major parties. Labour is known as pro-labor and the Conservatives are known as pro-business. Then the financialization kicked in late 70s, early 80s. What we saw that the Conservatives ruled consistently for 20 years in America. Out of 24 years, so the 20 years were ruled by the Republicans, and Democrats only just got 1 term. Same was the case in United Kingdom. We had Conservatives consistently making governments for 16 years, and Labour just got 1 term. So what made then Democrats in America, Labour in UK to rethink? Okay, so rethink. They thought, hang on, if we have to win the elections, if we have to come into the power, so we have to be pro businesses, we have to pro capitalism, and that's exactly what happens now in USA, in UK. No matter which political party wins the election, they're going to be pro capitalism, they're going to be pro corporates, they're going to be pro financial markets. So that's how they influence the economic outcome, unfortunately. So what is then the fruit of this? The fruit of this is, as I said, that we have seen income inequality, we have seen wage stagnation, we have seen household being financialized, we have the role of banks being changed, and we have seen some other, like sort of social and health implications of this as well. I'm going to try to go through these very quickly. Look, so this is the one fruit of the financialization. In 1980s, the household with lower income tend to have high growth in their income, and the household with higher income tend to have lower growth. But in 2014, situation has changed, right? So the lower income households not having any growth whatsoever, and as we can see, all the growth is actually eaten up by the higher income group, the elites, right? So the wealthy people, they are the one who are just eating all the growth in the income. This is very sort of thought-provoking, right? So the top 50%, so the bottom 50%, they are experiencing decline in their income growth, while the bottom 1% are experiencing a massive growth in their income. If we look at the Global Wealth Report by Credit Suisse of 2019, so we see the world is really rich. So we have 361 trillion US dollar of wealth in the world, divided by the adult population. So every adult in this world should have 70,849 US dollar, but unfortunately that is not the case. So this pyramid shows the distribution of the wealth. And if you see on the top 1% have 45% wealth, which means the remaining 99% have 55%. Top 10, 11%, they have almost 85% of the world wealth. And the bottom 89%, they have the remaining 15%. And the situation at the bottom is worth 2.8 billion adults only have access to 1.8% of the world wealth. 2.8 billion only have access to 1.8% of the world wealth. So I'm not claiming that we did not have this wealth inequality before. Yes, it was there, but the financialization has actually widened it, made it worse. If we look at before the financialization, we see productivity and wages were hand in hand, were gloved together, right? So you are rewarded according to the productivity. But after the financialization, productivity is much higher than the growth in the income. And if you see, it's almost a stagnant line as far as the wage growth is concerned. And another outcome of income inequality is that the countries which have higher income inequality, they are experiencing worst health and social services. The countries with low income inequality have access to better health and social facilities. So that is another fruit of financialization. Now, this is interesting. So what happened in the financialization? So the typical role of a bank that we all have been studying and reading in the books of finance is that the bank is an institution that receives savings from largely the household and use that savings to give loan to the business sectors, and that loan is then productively invested by the private sector or the businesses to create employment, to create a sort of economic growth. But what happened after this financialization? We see households are active on the both sides of a bank balance sheet. So the bank receives deposits from the household on one hand, and then use that money to give them loans on the other hand. So households are the one who are being completely financialized. And in a developed world, in developed countries, the average household debt is almost 200 to 300% of the annual disposable income of an average household. So as you can see, the countries like particularly Denmark and other Scandinavian countries are worst financialized. And what we have seen now is that the emerging economies, the developing countries, are gradually being financialized. I'm originally from Pakistan, so when I travel to Pakistan, I can see how households are being, over the last few years, the households are being dragged into car finance, into house finance, into credit cards, into sort of a lot of even the loans to buy mobile phones. So this is the households are trapped into the vicious circle of debt. And why banks have to turn to households? Because the businesses, they don't need banks to give them money, because the businesses, they have been sitting on piles of cash. All right, the corporations have been highly profitable in 80s, 90s, 20s. They have been generating a lot of revenues that they have been retaining and reinvesting in the business. And whatever the spare cash they have been using it to buy back shares from the market. Right, now interestingly, was 2020 economic meltdown predictable? I mean, for example, if there was no COVID-19, there would have been no economic meltdown, or was that meant to happen? Now, interestingly, you will see a number of articles published in 2018, well before the COVID-19 emerged, middle of 2019, in the New York Times, in Forbes, Moody's, CNN, even the Trade and Commerce wing of United Nations, UNCTAD. So they've very clearly stated that 2020 is going to be the year of financial crisis. Forbes even said that 2020 is going to be the worst decade in the history of America. Now, amongst all these, the most important prediction was made by Nurul Rubini, who is professor of finance in Stern Business School of New York State University. He and his colleague from London School of Economics, they wrote an article in 2018, and they precisely predicted what's going to happen in 2020. And I must remind you that Nurul Rubini is the same person who wrote an article in 2006 and precisely predicted the 2008 financial crisis, with giving absolutely logical and pertinent reasons. Rubini claimed that we'll have, no doubt, we'll have a 2020 financial crisis. And he said, worryingly enough, we will have the crisis, but we will not have the policy tools that we have in 2008 to deal with the crisis. And that is exactly true. When we had 2008 financial crisis, the base rates in America and England was around 5%. So which means the central banks were able to cut down the rates, policy rates gradually to provide quantitative easing. At the time of 2020 crisis, the interest rate was already around 0.5% or so, and that has been slashed to 0% in one go. So the central bank's hands are now tied as far as providing quantitative easing is concerned. So people who understand the economy and the economic trends, they were able to see the writing on the wall. For example, United States economy was growing at a rate of 3%, while its potential is 2%. So as a result of economic stimulus packages, slowdown in Chinese economy was imminent because of overcapacity and excess leverage. And the world equity market was absolutely fuzzy and fluffy, and you could see them. The stock markets are hanging like a ripe mango, ready to fall at any time. Even at Northumbria University last semester, our students, Business Risk 1 module led by Professor Nasir, our students gave a presentation on this topic, and that was about 2020 financial crisis, and that will initiate from China. So that presentation was well before we had this COVID-19 pandemic. So I mean, the people who understand, they were able to predict what is going to happen. So I also believe that this is very much the case. Now, impact on Qatar's economy and financial sector. So to discuss that, we have to just quickly look at the fundamental features of Qatar's economy that makes it sort of resilient to any crisis like this. So Qatar's GDP, look at the GDP by sector. So Qatar has an excellent balance between industry and services, almost 50-50. And there are not many countries in the world, by the way, these days, whose industry contributes 50% or more to their GDP. So Qatar is among very sort of few privileged countries, and I believe industry provides services are very important, no doubt about it, but industry is a real sector that provides strength and resilience to an economy. So the Qatar is very blessed in that sense. Qatar's major export partners, they are also industry dependent. While, for example, China, 40% GDP is by industry, Japan, 30% is by industry, South Korea, about 40%, is by industry. And if you look at other countries, for example, in America, industry is only 23%, same as in India, Pakistan, 18%. Okay, so the Qatar has a resilient contributor to its GDP in the form of industry. Qatar current account surplus, August last year, it was about 60 billion, though it is projected to be down for 2020 for obvious reason. In 2013, 2014, the current account surplus was a massive 667 billion Qatari riyals. So that shows the potential, that how big the balloon is as far as the Qatar's current account surplus is concerned. Qatar has a foreign exchange reserve of 37 billion, which puts it 48th in the world. But if you look at the forex per capita, then Qatar will definitely be among the top 3 in the world. And we have Qatar has a sovereign wealth fund of over 335 billion. Now, in Qatar, the way SMEs are being sort of promoted to take a central stage is very important. Ministry of Commerce and Industry, Qatar Development Bank, and Qatar Financial Center, they are playing a pivotal role in promoting SMEs. And I personally believe that companies like Apple, Google, Microsoft, Coca-Cola, they are businesses, they are not economy. And what is economy? Is SME. So the backbone of any country is SMEs, and SMEs taking a center stage in Qatar, which is very good news. Last year, for example, Qatar Development Bank provided a financial support of about 8 billion Qatari riyals to SMEs. Right, so this trend is very similar to what we saw in the time of blockade back in 2017. Like other markets in the world, so Qatar markets sort of reacted to what was happening in the international financial markets, right? And here we had then the oil price crash, bringing it down. But the good thing is it has immediately bounced back, and the trend is setting as well. So this shows the resilience in the Qatari stock market. I must say that services are 50% of Qatar's GDP, and out of 50% of services, finance and insurance makes up about 8.5% of Qatar GDP. It's not small, it's quite sizable, but because of the regulations, because of the extent of the financial liberalization in Qatar, I believe Qatar's finance and insurance sector is not big enough or significant enough to cause a systematic crisis in Qatar's economy. However, Qatar will definitely be prone to any sort of volatility in the oil market, because about 43% of Qatar's export is in the form of oil and oil-related product. So Qatar's response was absolutely spot on. Supreme Committee for Crisis Management, they adopted measures to target and combat the COVID-19, which was applauded by international agencies like IMF and WHO. The Qatar responded with a massive 23 billion economic stimulus package, and this is a massive, definitely, in all sense. In my view, even a smaller package would have done the needful for the time being, but by announcing this massive, so the Qatar government has made their intention very clear about how they sort of look at their people, look at their businesses, and look at their economy. India has also announced the same 23 billion economic stimulus package. So that 23 billion is for 1,300 million population, and the Qatar's 23 billion is for approximately 3 million population. So this speaks a lot. So that sort of brings me to the end of the discussion. I'm gonna sort of suggest a few recommendations. My recommendations are not sort of in the context of Qatar. They are in the context of general, because I believe this issue of financialization is very important. And the finance is powerful, no doubt. Finance is a beast. And we have seen the miraculous job that the finance has done in the last 3 decades to change our world. So I believe if this finance is made a responsible finance, socially responsible finance, then it can definitely do a lot good to the world than it can do harms. So my recommendations are in very general context. I think the social contract theory need to be strictly reinforced. Social contract theory is the same, just like a business operates because the society wants the product, the services that the business wants to sell. And if the society does not like the product and services, society can terminate their contracts by stop buying from them, and eventually they will be bankrupt and out they go. So I believe that needs to be strictly enforced. And the concept like CSR and public interest, corporate governance, they should not be industry-led initiatives. They should be consumer and the public-led initiatives. Governments should be pro-people and not pro-corporates. Yes, we need businesses. Yes, we need corporates. Yes, we need money. But I think putting people first, that should be the priority of the government. What we have seen in England and in America, for example, and other developed countries, the way households are being financed, you'll be surprised to know that in America, a significant 25% population in UK that does not have any cash for rainy day, and that is £100. So 25% of the population, which is about 150 million people, they don't have £100 if they have to raise in an emergency. Same is the case in America. Okay, so I think that in my opinion is the worst thing that has happened, the way households are brought into this vicious circle. The firms and the financial and non-financial firms, both, they should be divided into small and more visible units. It is actually the size and the complex structure of the corporates and the financial institutions that give them the power that they have to exploit us. Right, but we have seen that the wages in the non-financial sector has no growth over the last couple of decades, absolutely stagnant wages. All the growth in the wages is in the financial sector. So this got to be aligned somehow. How, I don't know, but that must be aligned to make sure that there's a sense of equity in income distribution as well as income growth. Onus is on governments, institutions, private institutions, NGOs, all of us who have some sort of background to promote financial literacy and financial know-how. I believe most of the people who gets into the trap of this financialization, they get into it without even realizing it, without even knowing it. I think the financial literacy is very important to combat the challenges that the financialization of the world presents to all of us. So I'm concluding my discussion on the note that it's a reality that we live in a world that has been financialized. We live in a world where finance, financial markets, financial institutions, and the financial motives, they have a dominant place. But somehow there need to be a way that the finance is made socially responsible. Finance, if made socially responsible, will do miraculous things to the world and its people. Thank you very much for listening to me. We'll unmute the mics, but I mean, I suggest if you speak one by one. So it's not only the question and answer session, but please feel free to make any comments, share your experience with us. I'll be very happy to hear from you. Thank you very much for your attention and listening to me. So I'm happy that I'm able to finish within approximately 32 minutes.
Thank you, Dr. Ali, for a nice discussion about the impact of the coronavirus. But my opinion, this will be much harder than the one in the 2007, 2008. Because we doesn't know when it will gonna be end.
Totally agree. That is why I said the Forbes article in 2018, the headline was that this is going to be a decade-long recession, and it will be the worst in the history of it will be the worst in the history of United States. And obviously, if anything hits United States, it's going to hit the rest of the world as well by one way or another. So I totally agree with you that the complexity is there. However, I think staying positive, that is the most important thing, because I'm sure as a finance students, we all understand that the market sentiments are very important. So if we all positive, it's going to be positive. If we all sort of see this in a way that's going to be challenging, then this is how it will turn out to. So the positivity, in my opinion, is the way.
Okay, thank you.
Dr. Ali, thank you for the really rich webinar. I appreciate it. And the remark I would like to make is about Basel III. So usually one of the reasons was created is to have a protection in those cases. But although there is no issues of liquidity, it still doesn't seem such measure will really be enough to overcome such impact with the coronavirus. So do you think there will be even extra scrutiny measures than the Basel III to be implemented in the future?
I mean, look, the problem is there should be measures. It should be regulated, just like, for example, even one of the forefather of capitalism, Lord Maynard Keynes, even he suggested that we need regulations and the government to save the capitalism from the capitalists. All right, so we need regulations. However, we have the financial elites with a lot of money on their disposal to lobby against any regulations. For example, the size of the derivative market, as I said, is 640 trillion US dollar, and 70 billion is reportedly spent by the financial elites to lobby against the regulations to make the derivatives to be traded on the exchanges. So the derivatives at the moment are over-the-counter market. So they lobby a lot of money against bringing them on exchanges. So yes, I agree there should be, but to what extent we can regulate, that is unfortunately is very difficult.
Thank you. Just a small note actually about capitalism. You mentioned it. It doesn't seem actually it's working as much now, where we notice that there's more socialism with the democratic.
Sorry, could you speak a little bit louder, please?
Yeah, I'm saying, what about? Do you think there will be a rise in more socialist democratic system than capitalist, as it doesn't seem to work with such issue?
I don't see going back to the socialism or thing, but what I see is I mean, the people dissatisfaction with capitalism and the outcome of it. That would definitely there need to be something to be in place to make sure that the capitalism is very good for growth. Okay, if the world has developed this far, we should be thankful to capitalism, to be honest. But there should be a way that the capitalism is saved from the top 0.1% financial elites who are controlling things for their own financial motives.
Hello, good evening.
Good evening.
Yeah, my question is, the world is curiously looking to those countries where the mega events like Olympics and the World Cup is going to happen. I mean the football World Cup. So how, in your opinion, how well is Qatar is prepared to face this type of emergencies or uncertainties?
I mean, Qatar has been progressing very, very well towards the event, but unfortunately there are some events which have international dynamics and magnitude, so they are beyond. For example, if the FIFA decide anything about the World Cup, there's nothing Qatar can do. But as far as I'm aware, Qatar is absolutely ready to host the event. We all have to be positive, keep our fingers crossed that the situation starts improving in a month's time or so, and then hopefully we'll be ready for the mega event that we all so impatiently waiting for.
Thank you.
Hi, I would like to thank you for this amazing webinar.
My pleasure, sir.
Very interesting points of view, information, mashallah.
Thank you.
And just a slight note, I believe capitalism and those 0.1% elites, they're unstoppable, like the dawning of the sun. Yeah. No matter what is done by whoever moves, nothing can be stopped.
Unfortunately, that is true.
Unfortunately, well.
At the moment, what it looks like. I don't want to use the word sort of revolution where people stand up against this unfair distribution of the income and the wealth and the power. Unless at the things stand, no country is willing to give up capitalism. They shouldn't, because I believe capitalism has done a lot good to this world. But unfortunately, I totally agree with you that top 1%, and particularly the top 0.1%, they are absolutely unstoppable at the moment.
Hello.
Hello, sir.
Do you have any recommendation how Qatar can use this, like government can use the package which is they announced? Any recommendation, what kind of steps or how they should implement to the society so that the people can, normal person can get the benefit on that? Do you have any recommendation on this?
I'm sure the relevant ministries are working on this. For example, the support is being provided to private sectors. In particular, the bulk of the economic stimulus package is aimed at private sector. Support is being provided to the universities and other educational institutions in the Qatar. So, Qatar has a robust governance system, and I'm sure the relevant ministries are doing the job that they're supposed to do in this difficult time.
Hello, I just talk about this point. We all agree that there is big financial crisis all over the world, but what about and affect all the countries? So what the value of the currency in the countries, it will be affected, and how it will be different from country to others, or how?
What interestingly happened when the financial markets started crashing. Interestingly, the most international currencies, they fell against the dollar. Norwegian krone and other European countries. So the dollar was rising, and that was surprising. And one main reason for that was because the big funds who have billion and trillions worth of assets, they were investing money in US Treasury bill, which is known as the safe haven in the difficult time. I do not see any problem with the Qatar, because Qatar currency is pegged against the dollar, and I do not see any reason why this peg will be removed in the short term or even medium term. Other currencies of the world, definitely is a very volatile market. The most volatile market of all is actually the Forex market, and there will be a lot of fluctuations in this market in the next few months at least.
Thank you, sir. Thank you.
My pleasure.
2 points I think we should point out here: the performance of Qatar government and the stock exchange. Last week, the Qatari government sold over $10 billion in bond.
Correct.
And
Absolutely.
drew over around 30 billion in demand.
That's true.
I mean, this is amazing, because if you compare it to any other country, it is hard to raise money and sell bond nowadays. It's hard for any people to trust any government or any corporation, especially in bond. So when a government offer bond, large bond, $10 billion, and demand for it exceed 30 billion, this is a very positive signal sign that the Qatari's economy is healthy, and people worldwide still trust the Qatari's government financial and economical situation. At the same time, if you watch the performance of Qatar Stock Exchange, the yield to maturity during the first quarter for Qatar Stock Exchange is minus 17.74. I mean, it's a negative number, but still compared to United Arab Emirates or compared to Saudi Arabia or even Dow Jones or London Stock Exchange, the performance of Qatar Stock Exchange is way much healthier than any other stock exchange worldwide. So this is another thumb up to the Qataris government and to the stock exchange in Doha. I wish that the coronavirus or the COVID-19 will be over soon, even though I'm a little bit worried that it will last with us for a couple of months. And my advice for investors: keep the cash. If you have the cash, you are the king. You know, we haven't experienced the worst yet. And thank you for the session. Very interesting, Dr. Ali. Thank you very much.
Thank you, sir. And I must say that it's a very good advice that keep your cash. However, if you are followers of Warren Buffett, for example, he usually likes to enter the market when everybody is either leaving the market or everybody is holding on their cash. So he likes to buy low and sell high. But because the volatility and uncertainty is way too much at the moment, so I totally agree with Dr. Nasir's advice that if you're thinking of investing, hold on to your money at least for 4 more weeks until the situation sort of we see a little bit daylight. Thank you very much, and God bless you all.